Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Thursday, September 22nd. And I just want to say, if you haven't checked out yesterday's episode or this weekend's wrap-up episode, be sure to do that because those were really good. Went more in depth this weekend, but yesterday I had a longer than usual Daily Dose episode talking about the Fed hike and what kind of to expect next in markets. But again, if you like this type of content, please consider subscribing here on YouTube or follow us wherever you listen to podcasts. I release an episode like this every single day that the markets are open, just kind of recapping what happened during the day. And then over the weekend, I'll release a longer episode that has a little more analysis and goes more in depth. So if you like having that consistent content, be sure to follow us and subscribe. It would mean a lot. So let's get into the episode for today. So the markets basically just kind of continued what we saw at the end of the day yesterday after the Fed announced the 75 basis point hike. The S&P 500 was down about 0.85%. The Dow Jones was down 0.35%. And the NASDAQ was down almost 1.4%. If we look at the year-to-date chart on the major indices, you'll see that the S&P 500 is now down a little over 21% year-to-date. So we haven't been this low since obviously the lows in June, but we're still waiting to see the Dow Jones down over 20%, and the NASDAQ is now approaching 30%. So a pretty big haircut from the beginning of the year, but valuations were historically inflated. And so while people may freak out over a market move like this over the course of a year, it is something that you can expect over the long term, and it's something that you can use to your advantage to make money in the future if you have a long time horizon. So let's get into the stock charts. So we said yesterday that it looked like the market was testing the bottom of this zone as kind of like a resistance, and then through when the Fed was speaking, we just dumped, and then today was kind of a continuation downwards. We're still making our way down towards this last zone that we saw in June. So the 3706 to the 3636, which is pretty much the low that we saw in June. So if we breach through there, like I was saying yesterday, I do expect eventually for this channel line to get hit. I don't think that it'll just get to like this zone here and then make like a big recovery, whether it's a bear market rally or whatever happens. I think we could definitely see some buying pressure here if we break through the June lows, but I would definitely expect this channel line to get hit. Maybe we make our way down to like the 3250. We could honestly go below 3200, closer to like the 3150, according to this channel line. But that's just pretty much what I'm looking at. And again, let me pull up the 200-day moving average. I wish it would just stay up for me. I won't be expecting this bear market to be over until we breach through this trend line and the 200-day moving average. So they're kind of parallel with each other right now, but I would look to see both of those decisively broken through before I'm willing to consider that this bear market is over. Again, for now, it looks like we're headed towards the June lows. If we break through, I'd expect a touch of the channel line. If not, I would expect some recovery back to this zone here at first. Bitcoin. Again, it's the same story every day, honestly, with Bitcoin. We've been trading in this range for almost 4 months now. It's not looking great, even though that it's up almost 2% today. We're kind of just at the top of the zone here that we have mapped out around 19,200. It's broken through for now, but obviously we could see that close below when the day's over. Again, for Bitcoin, it's a matter of keeping above this 17.5 to 17.7 level. That's kind of our point of no return. And if it breaks through there, it looks pretty bearish. We could go all the way back down to the 9 to 12,000 level. I do think it would be a great buy there, but it doesn't look great on the charts right now. Obviously, a huge downward trend. So I'm going to cut it right there. If you haven't watched yesterday's episode or the weekend episode, be sure to do that. Subscribe here on YouTube. Follow us wherever you listen to podcasts. And I will see you all in the next one.